Good afternoon, everybody. This is Mark Lambert from Data Special. We're partners with Anthony Marino, market and timing and pricing service. Just want to go over a couple things of basically some day trading strategies for today, which happens to be June 1st, 2011, with an ensuing market sell-off, which we were kind of aware that this was going to be happening. I wasn't too sure if it was going to happen today, but I want to show the bigger picture of the cash index on the S&P. I know we've done a couple seminars on Elliott Wave recently, so maybe some of you guys are familiar with what we were looking at. But basically, this is from the July low of 2010, and we had been moving up at what we consider to be a fifth wave. Okay, with a fifth wave meaning that when this one is complete, it should make a dive down and go to retest the March '09 low. It may not make it that far, but if this is a larger degree first wave that we're completing, wave two has all the latitude to go and retest that low without breaching it. So, I mean, we could see the Dow back down at 8,000 again, or wherever. It really doesn't matter. We'll have plenty of time to assess what's going to happen between now and then anyway. So, basically, who cares right now? Because we basically cater to day and swing traders, and we're going to try to stay in the swing of things, I guess you could say. But basically, the count that we had been looking at, this little structure right here, I'm gonna get into this structure right here at one point or another, which is kind of like a finding that I found myself inside of wave threes that I really haven't seen too many people talk about it. I mean, one of two things happens inside of a wave three. You either have a big gap, which has been coined, I forget a Prechter's gap or whatever it was, based on Robert Prechter from Elliott Wave International. But another thing too that I've seen just as often inside of wave threes is that you get a short spike of consolidation before it moves back up again. So you either get a large gap or you get this type of consolidation. So I was kind of looking at this as being the internals of wave three. We had a leading diagonal, a perfect one-to-one fib projection right here for wave two. And inside I'm seeing wave one, wave two, wave three, wave four. I do not believe this is wave five yet. The reason why I'm saying that I don't believe that is wave five is both the cash index and also the S&P futures in this last structure up. This does not look like five waves. It obviously looks like three waves. And if you try to count it as five waves, it would violate the rules because this would be wave one, this would be wave two, wave three, wave four, and wave five. And wave four in the cash index and also the ES futures dug deeply into wave one territory. So that's why it has us looking at one of two scenarios right now. One, we could be forming a triangle, which we could consolidate sideways for probably in the next several months. And then make another drive for a high, and after that high is registered, then we can have a decent sell-off, which may last, who knows, could last a year, year and a half, 2 years. We'll have plenty of time to assess what's going on at the time, but one of the structures that it could also happen right now too is that we've been kind of looking at an expanded flat pattern that seems to be developing inside of the cash index and also the AS futures. What we have here is we're looking for a 335 pattern. We've finally broken this channel today substantially. That's been intact now since July of 2010. Basically, the 335, we're looking at this as an A, B, C, registering a larger wave A, an A, B, C, registering a larger wave B, and then with a C wave, I mean, this could also be a C wave inside of a triangle, which should not breach this low. But if it does breach this low, then we have to look at this as an expanded flat, where an expanded flat is a 335 pattern. We get the 3, we get the 3, and now we've done a leading diagonal, wave 1. This, by all means, looks like wave 2. And then the next thing is that after this consolidates a little bit and moves either sideways or up, I'm pretty much expecting it's going to come back and touch the bottom of this channel. When it touches the bottom of this channel, if the expanded flat is definitely in play, this will have a severe downdraft, which might last a few days. Should cover a lot of territory, and it will breach this low right here we registered back in what exactly was that date? On 316, and that low was 1249.05 on the S&P Cash Index. We also have the exact same thing developing right now on the US. Same thing. We have an ABC. As we look back over here, we have an ABC. Then we also have another ABC. Here's a structure I'm talking about, the overlap, both on the ESs and also on the S&P 500. And then right now what we have is basically, I threw this fib on later this afternoon. It basically breached down below the 50%. It's consolidating at that 50% now. So what we're looking for, if it's a triangle, to probably go down to the 100 or the 127. So anyways, I didn't want to really get into this larger time frame. I want to get more into the fact that I want to show how I would have traded the Russell today. I took one small trade. Basically, I was away a good part of the day, so I kind of missed all the fun. But one of the things I want to show is that we've had this green fib in from the last video, which I'm sure you remember. Basically, we came up to a 161.8 this morning, and then it turned around and started moving down. Basically, the first place that looks like a wave 1 and a wave 2 would be this area right here, which I struck a fib on. And as you can see, too, I'm going to kind of highlight the fib a little bit. As you can see, with this fib highlighted, how the market used that as a structure to move up and down, up until it hit about the 261.8. And after that, it almost started to negate it. Well, when you see something like that, what I normally do is when I look at this would be a wave 1, a wave 2. Now, since this has made a linear kind of move down, it's kind of hard to gauge which waves are which. So what you have to do at this point in time is count the internal waves. And we've discussed numerous times, 5 waves, 9 waves, that's an impulsive move. So if this is wave 1 and this is wave 2, what do we have here? We have 1, 2, 3, 4, 5, 6. Let me bring the 6 to here. 6, 7, 8, 9 waves down. Okay, at this point, I would say this is wave 1, wave 2, wave 3. Let's superimpose the first wave onto the end of wave 3, which is what I would normally do anyways. And as you can see, I'm going to make this one disappear for now, but this may be active as long as that 0 does not get basically breached. I want to see this as wave 1, wave 2, wave 3, wave 4. Then as we move through wave 4, as you can see right now, the market came down to a point where it started to use this fib. It's a 1-to-1 fib here, down to 161.8 here. We've been consolidating sideways. With the sideways consolidation, unless we have like a substantial lift off of this on the market open, we're definitely going to go down to the 200 and start moving down even a little bit lower. But I'm almost thinking that probably within the next day or so, maybe even in the overnight action, we should have some type of retracement as people start closing out their shorts. If not, if we have a sideways moving action, they're showing a sideways moving structure, which would be wave 2. That would be very, very bearish, meaning that we may not have much of a bounce to sell into. Also, when I'm also looking at this as a 5-way structure, which means we will have some type of sideways action or a three-wave correction, which means we're going to have at least one more structure like this develop. Whether we're doing a triangle or we're doing an expanded flat, we will have at least one more 5-way structure that should follow this. So that's pretty much it, folks. I hope that these intraday type of videos that I'm producing along with Anthony are helping you in your trades, and I hope and pray that you start to understand how to use Fibonacci expansion on market structures and which structures to look for. I would tell anybody, if you are going to take up Elliott Wave, the most important thing for you to learn are the corrective structures. When you understand the corrective structure, you will understand where to start anchoring for the impulse waves. And that is pretty much it. You don't have to look for the wave 3. The wave 3 will be there when we're ready. Just because the fact is, before a wave 3, a wave 2 has to happen, and that is a corrective structure. And those are the ones we want to concentrate on. When you can understand how they unfold and be able to identify them, you will be able to trade the trend of the market on a consistent basis. Anyways, folks, I hope you enjoyed this video. I will be producing some more. Anthony's on vacation for the next several days, and I'm kind of like taking a little bit of time off and pursuing a couple other things for the next several days myself too. But I am still semi-active trading over the next week or so, and then I'll probably by next Monday or so, probably in the next 3 or 4 days, I'll be back to full time again. But I just hope everybody enjoys these, and we will see you soon. Have a great day, Godspeed, and good trading.